Gold has been on a rocket ship with price going to the moon for over 2 years, and my ultimate gold scalping strategy has helped me generate consistent, reliable trading returns as I build my mansion this year behind me, and still giving me lots of extra time away from the charts to spend with my beautiful family, because this strategy works in just 2 hours a day. Just look at these incredible trading results I've had in my gold trading room over the past year. All because I'm in buy now mode on gold, I'm trading perfect breakouts, and hitting take profits at an unsustainable rate. Now, I don't promise or guarantee any results, but I will teach you my complete gold scalping strategy I've been using all year, showing you trade examples and doing my best to take you from a beginner to a pro. So smash that like button, subscribe to the channel, and watch out for the free 5 hidden VIP codes throughout this video, and let's win some trades. Step 1, we are in buy-only mode on gold. Look, this is a weekly chart. It's going in just one direction. If you are selling gold, you're taking the underdog against Michael Jordan. There's no reason to go against the long-term trend here. JP Morgan just forecasted a gold price at $5,055 per ounce by late 2026, and there's a lot of other institutions saying the same thing. To get to over $5,000, we got to come all the way up here, so we should be buying. Don't overthink this. We have projections of $4,200 to $4,500, $4,800 to $5,200, and $5,500 to $7,000 on gold. And with the U.S. government $37 trillion in debt, this is all possible. Now, before we go into step number 2, leave a comment below telling me something unique about yourself. I just want to learn about you, and I'll give 3 of you free access to my VIP room randomly. Step 2, we only need 2 hours per day to trade. We are setting up our orb. So we're looking at the first candle here at 9:30 to 9:45, New York Stock Exchange open. When that 15-minute candle is closed, we mark up the high, we mark up the low. If you need help with this, come to indicators, find the opening range with breakout and targets indicator. This is the indicator right here. These are the settings you need. Time period, 15 minutes, custom range, 9:30 to 9:45, New York Stock Exchange open, UTC -4, and just make sure right down here your UTC -4 as well. Now, our trading range is set for our New York trading session. We come to the 5-minute time frame. On this time frame, we are just waiting for the price to break out the top or the bottom and close. You can see right here, we had the price break out the top and close. This is the confirmation that we're going to be buying in the New York session. And you already know on gold, step 1, we're buying gold. So we play this out. We got to get into a trade somewhere here. There's a fair value gap at this level right here. We can enter a buy position on that fair value gap, and we can play this trade out and see, look, it's a fantastic trade. It goes in our direction and even smashes our take profit right there. But in order to have results like these right here, you've got to have the right entry model, and you've got to have the right broker. So if you're wondering where I trade, I'm trading with the AAAFX broker. The spreads are low, the commissions are low, registration is absolutely free, so click the link in the description now, and let's get into step 3. For step 3, these are the 3 entry models I found most profitable for trading gold. Number 1 is when we get an impulsive move outside of the orb, and we simply retest and enter at the top of the orb. This is one of my favorites for gold. This one plays out incredibly well and frequently smashes that take profit. The second entry model is when we break out of the top of the orb and we come back to that range midline for an entry, and from here go up, smash that take profit again. And lastly is what I just showed you, where we have that big impulsive move out that creates a fair value gap. Price then retraces to that fair value gap, pushes up, smashes the take profit. Let me quickly show you that one again before I get into all of the trade examples. All right, a fair value gap is just a 3-candle pattern. You can see this candle right here and this candle right here creates an imbalance in price because the candle is not filled, right? This area right here is not filled. You can see this is an imbalance. So frequently, price will come back to that level and react off of that level to the upside, which is a great gold entry model using the orb. Now, obviously, there's a lot of discretion that goes into this gold scalping strategy, and I'm going to show you that in 3 live trades with the 3 different entry models so you know how to trade gold in every single market. Let's get into that now. It's time for the trade examples. If you're watching this right now and you go, Pat, this never actually happens in the markets. Look, we just had this. This is a live chart right now. We closed right there. And then during that push up, that impulsive move, we created a fair value gap right here. If price respects this level right there, we'll be able to get into a trading position right here and make some money. I'm telling you, this actually does happen. Now let's get into the examples. So we're on the 15-minute time frame. We're watching that first candle, right? That candle is being created right now, and that is our range. We have the top of the range, we have the bottom of the range. Then we come to the 5-minute time frame. Obviously, we're on gold. We're just looking for buys. So if price breaks out of the top, we're in good shape. If it breaks out of the bottom, we're not. But you can see right there, price broke out of the top of the range, so we're looking to buy. Now, where do we want to buy? Well, we do have a fair value gap right here. That's a potential entry. Just go to your indicators, type EMA, click on moving average exponential. I'm using the 200 period EMA. I just want price to be above that level as an extra confirmation. Now on this trade right here, I decided to enter the position at the top right here. I don't always use the fair value gap, and if we pull the fair value gap over, didn't really have an overlap. If price was using this level as resistance up here, I'd more likely use that as the level. But this is what I decided to do right here. And you can see price did tap the fair value gap. I could have used the fair value gap, but that's okay. Price pushed all the way up here and smashed my take profit perfectly using the long entry model. So that was a very nice win. And the next day I did the exact same thing. So let's zoom out a little bit right here. You can see, look, came back, reacted off that level, shot up again. And then the next day, very similar. What did I do? I did the same thing. Price broke out the top of the range right there. I decided to enter right here above the 200 period EMA. And this trade took longer, but did go all the way in my direction, inevitably smashing my take profit. So again, if you're saying, Pat, this doesn't work, well, this was back-to-back days where I used it. For the second trade, we're doing the midline entry, and I'm going to get into more detail where to put your targets, where to put your stops, and when to look for that midline entry. But if you like my trading style and you want some trades for me, these are the last 4 positions I've sent in my VIP Gold trading room. So click the link in the description if you want some of my trades. Okay, sorry for the ad there, just had to do it. All right, so we already have the range set, right? We've got the top of our range right there. We've got the bottom of our range right there. We're on the 5-minute time frame. We're waiting for a break. There's the break, and the candle closed, right? That means we're looking for buy opportunities, right? So let's just continue to play this out. That was a pretty nice move right here. You can see we impulsed all the way up there. Now, where are we going to get into the trade? Well, we could get into the trade at the top right there. It looks pretty good. We've got a tiny little fair value gap right there, so I don't really care too much about that. So let's go ahead and just draw a line right at the midline. Let's just draw a line right there, and let's use some price action, okay? Let's scroll back, right? Let's scroll back, and let's just take a look. Well, look. We got a pretty good reaction off of this level right here. Got a good reaction off of the level here. Reaction off of the level here. And another huge reaction off of the level right there. Look, the price pushed down to here, here, and here. And then as we zoom in on our position, the price did use this level again right here for the most recent push up. So we're breaking through that level of resistance, and then we're going to use it as support for a midline entry. That's a good place to get into a trade. So let's set up our long position right there. Our stop loss. What are we going to do with our stop loss right here? We could put our stop loss below the range right there. The bottom of the range could be used as support. Where do we want to take profit? Well, we should look left again. Do we have an area? We do. Let's pull this all the way up here. Why? Look. Price recently reached this area right here. This was a strong level of resistance, right? Price pushed down off of that level right there and held the level right there. So back into our trading position. This is our midline entry right there. And let's play this out. Let's see what happens. Price tapped into the midline entry, shot up immediately. That's exactly what you want to see. Multiple green candles in a row as we slowly but surely come all the way up to where? To our take profits soon, I hope. And there it is, smashing the take profit right there off our midline entry. On this trade, look, 4.75% stop loss below the range. Take profit at resistance right here. And if you watch me on stream, you would have seen me right at this level right there take a take profit, won a partial profit at that level. Now, we've got one trade to go, and it's the fair value gap, your favorite entry, so let's do it now. All right, so I was going to show you a trade example that I had ready on a past trade that I had placed, but remember just 5 minutes ago, I was looking at the chart, I was showing you, hey, look, we've got this fair value gap set up. Look, this is playing out in live right now. Price tapped into the fair value gap right there. We entered the trading position perfectly, and it shot up. At this point right here, we had this fair value gap right there. That's where I would have taken a partial profit, and then I would have pulled my stop loss to break even right here. You see me do it on stream all the time. As for my stop loss, look, I have a stop loss. It's right here. It's below this EMA, and I'm doing this all live right now, okay? There's no cuts here. And then for my take profit, I was just targeting this level right here. I could bring that down a little bit so we're not targeting the top right there. But this is it. This is the trade. We would be in profit already. We would have a break even set right here, and we would be pushing up to that take profit. Do I even need to show you the trade example? Well, I guess I should, because this isn't played out yet. So here's the third trade, the fair value gap example. We've got the top of the range right here. We have the bottom of the range right here. I'm already on the 5-minute time frame. I don't have to show you the 15-minute every time. You're smart enough to figure it out. Let's play it out and see what happens, right? Look at this right here. We've got the break and close right there, okay? That's our first indication we're looking for buys in the New York session. We've got the fair value gap being created, right? 3 candle pattern right there. That's a nice fair value gap. Why? This candle right here does not close above it. This candle right here does not close below it, creating a level of imbalance right there. So that's the area we're going to target. So let's continue to play this out. And there's our entry, right? So we already had our long position, probably something like this in the middle of the fair value gap. You could have it at the bottom, but something like this right here. If we scroll left, there's no real price to use here. So this is simply all we have. We have to watch the trade play out. If there is no resistance, what are we doing for our take profit? Well, we have our stop loss here. It's below the middle of the range, and we could use a Fibonacci extension right here. Maybe we're looking for a risk reward around 2. This one I did about 2.25, and let's just continue to play this position out. Tap the fair value gap again, closed in the fair value gap, so I felt okay, the fair value gap was still being respected, and then price did inevitably shoot up and smash.
记得关注再走哦。